Something unusual is happening in the markets today. Silver is up nearly 3%, gold is up $50, platinum is higher too. But oil is falling sharply, with Brent crude now $98.50 and WTI $91.75. That is the contradiction. If markets were simply celebrating a possible US-Iran deal and a reopening of the Strait of Hormuz, you might expect oil to fall and precious metals to weaken. But that is not what we are seeing. Oil is down, metals are up. Something does not quite add up. Welcome to the 2% Brief. If you follow gold, silver, oil, and how the global financial system affects your everyday wallet, please like the video and subscribe. This is exactly what we track here. And for my deeper weekly analysis, including the levels and scenarios I'm watching, join me on Substack. The link is in the description and pinned comment below. Now let us keep this simple. Oil is falling because markets are reacting to hopes that a US-Iran arrangement may be getting closer. If that happens, the Strait of Hormuz could reopen more fully, and more oil could move through one of the world's most important energy routes. That matters because oil affects far more than petrol prices. It affects shipping, food transport, factories, household bills, and inflation expectations. So when oil falls, markets often breathe a sigh of relief. They start thinking one of the big inflation pressures may be easing. That is the good news. But here is the catch. If investors were fully relaxed, gold and silver would probably be weaker today. They are not. Gold, as I've mentioned, $4,561. Silver, $77.81. Platinum, $1,974. Think of precious metals as financial insurance. People do not usually buy insurance because everything feels safe. They buy it because they still see risk. So the market may be saying two things at once. Welcomes lower oil. But it is still keeping protection in precious metals because the bigger problems have not disappeared. Government debt is still high, consumer confidence has weakened, bond yields remain uncomfortable, and the Fed still has a difficult inflation problem. So yes, lower oil helps, but it does not solve everything. For silver, today's move is especially important. Silver's been through a sharp 3-month correction, but today it is moving strongly again. The first level to watch is $75. If silver stays above 75, buyers are still defending the market. The next zone is $80 to $81. Silver needs to clear that area to prove real momentum is returning. For gold, the area is $4,450 to $4,500. If gold holds that zone while oil falls, it tells us gold is not just reacting to the oil shock. It may still be reacting to deeper worries about debt, inflation, central banks, and confidence in paper money. Now, one important caution. Today is a bank holiday in both the UK and the United States. So many major traders are away from their desks. When fewer people are trading, prices can move more sharply than usual. So we should not overread one morning's move. The real test is what happens over the next 24 to 48 hours when normal trading conditions return. Scenario 1. If oil stays below $100 and metals stay high, that suggests the demand for protection is still real. Scenario 2. If metals reverse lower, today may have been more of a holiday market move. My view is simple. Do not just look at the oil headline. Watch the contradiction. Oil down, metals up. That means the wider risks have not gone away. And if you want to understand how we got here, watch Saturday's video next. It explains why gold, silver, oil, consumer pressure, and the Fed were already sending mixed signals before today's move. The video, that one, should appear on screen now. So click that next for the full context. As always, this is analysis and education only, not financial advice or a recommendation to buy or sell. Let me know in the comments. Is this a genuine warning sign or just a holiday market bounce? Thank you very much for watching. Please like and subscribe, and I'll speak to you again very soon.